Okay, Zoe, so we need to talk about the 5 Cs.
Yeah, so Craig grew up here in Arizona, and apparently it's a thing here to talk about the 5 Cs. What are they? Climate, citrus, cotton, cattle,
And copper.
Copper, yeah, that's the other one.
Yeah.
As a non-native Arizonan, this is a foreign concept to me.
Yeah, I'll agree with that. I definitely moved here for one of those things and didn't know the others either. So
Cattle, right?
exactly. Yeah, I was here for the beef.
Yes.
I mean, the interesting thing to think about with those 5 Cs is what happens when your entire county is based on one of them, right? And that's kind of the story in Greenlee County. And it means that you don't look the way that the other counties look in the state of Arizona and probably nationwide. And in fact, over the last 10 years, Greenlee's major revenues have only grown 17%, while the rest of the state's grown at like 71%.
Wow.
And so that's what we'll dig into today. So welcome to Off the Charts, the Creatures of Statute series where we dig into the data and see the stories that most people and most policymakers don't get to see. I'm Vanessa Fielder, joined by Brandon Nee and Zoe Averill. And today we're going to talk about Greenlee County, why they look so different from the rest of the state and what that means for the county providing services to constituents. Let's get into it. All right, so I'm going to pull up the encyclopedia because I think this is a good starting point. But Brandon, while I do that, you were the one that noticed this trend, kind of what popped off the page to you.
Yeah, I think it was just how different they looked than everybody else. And, to take this back to what we've created at CSA, this was one of the primary objectives of having a research entity here and having different tool sets for not just the county to use, but for all of us here at CSA. It was these type of dashboards or quick visualizations that would let you check on things, right? Just see what was going well or see what just looked odd. And this is one of those situations where by just looking at a collection of all 15 counties, you could see how different one of them was against everybody else.
For sure. And for this instance, let's pull up kind of their major revenues, because I think that's the thing that allows us to see this really quickly and at a glance.
So when we're talking about major revenues, we're talking about what? State shared TPT, so state shared sales tax, local excise taxes, a vehicle license tax, and
the property tax.
Yeah, and the property tax.
Yeah, so those are the kind of big four, as we like to refer to them in county finance land, because it's what most of the county is run on, at least from the general fund, right, for most government services. So outside of things like roads, when we're thinking about funding criminal justice or the sheriff's office, most of that stuff comes out of these revenues. All right, so these charts, it's a lot, right? Like we're looking at all 15 counties across the last 10 years and what each one of these revenue streams has done. And Greenlee's bars just look totally squished. They're a lot shorter than the other 15 counties.
Yeah, I think even if you don't know what's going on here and what this is saying yet, you can easily tell that everybody else kind of looks like a crayon box and they look like they're missing colors, right?
Yeah.
So when we kind of look at this, the insight to gather here, right, is that one, their excise tax bar is nowhere to be found, right? That's that dark orange bar that would be there. But they do have one that seems to be performing kind of similar to the other counties, that property tax bar in dark blue. It's grown by about 51% compared to all of the rest of the counties growing by about 50%. So that's pretty much on par.
And that's over the last decade, correct?
Over the last decade, yeah. So we're talking about 5% per year in terms of revenue growth from 2015 to 2025. But then those other bars, like you can barely even see their TPT growth, which is that sales tax that they get from the state. Compared to the other counties, their TPT has almost doubled, right? Kind of on an aggregate basis. And Greenlee's is basically flat.
Yeah.
It's up 7%. What's inflation been over the last 10 years?
Over the last 10 years, the CPI has increased by 33%.
So they're not even treading water, right? Like they're declining in their purchasing power, at least on the general fund side for Greenlee.
Yeah, it's kind of amazing.
Yeah. And the only thing that's kind of performed relative to the other counties is the property tax, which is the board's only lever, really.
Yeah.
And if the singular nature of your revenues is overperforming, it can kind of work.
Yeah.
Right. But the fact that that's performing similar to everybody else, and then they're basically missing any kind of growth in their other revenue categories, really the part that's problematic.
Well, and you start to really feel the squeeze when you factor in other cost drivers, right? So if they're not even tracking inflation, yeah, that's certainly a squeeze there. But then you factor in other things, state mandated costs like the long-term care system, court system, salary growth, personnel, just any of that factored into this really constrains the county even more, makes things really difficult from a structural standpoint.
For sure.
And so just to help orient people to everything that's going on this page, what we were talking about with the bars is growth. What you're seeing on the left, though, is composition of revenues over time of these big four categories. So when you look at Greenlee's, it's not that they don't have those categories. They're not seeing growth in those categories.
That's a great point because TPT is Greenlee's primary source of funding, right? These orange bars are at least like 50% of all their revenue comes from TPT, and it's only grown by 7% over a decade. So it matters a lot that the county's major revenue source hasn't grown, right? Because maybe if it was like VLT, which is less than 4% of all their revenues, if VLT wasn't performing the same way the rest of the counties was, maybe that wouldn't be such a big deal.
Mm-hmm.
But TPT is the way that they fund services to their community.
And from beginning to end, you can see the real change in the mix of revenues.
Mm-hmm.
Yeah, you see how much more reliant they are on TPT than other more property tax reliant counties like Gila or even Cochise to a certain extent.
So knowing that their growth is so different from the rest of the counties, let's dig into kind of the why and look at that sales tax base and what might be different in Greenlee County compared to the rest of the state. Because it really will help us kind of look across all 15 counties at what their revenue makeup is. All right, so let's just pull up kind of the share of total taxable sales to get a sense of what's different in Greenlee. Yeah, so Greenlee looks just a little bit different from everybody else. Yeah, that's like single color in Greenlee County, right? They're totally and completely dependent on like this dark charcoal color. And that's all other taxable activity, which in most other counties, I don't think is a very big deal.
Yeah, it's pretty de minimis.
Yeah, let me filter this page to be able to show just that one classification. We can get a better sense. This is,
Wow.
so for those just listening, Greenlee's bar is more than twice as high as the next largest county that's dependent on this kind of all other taxable classification. It's 52% of their total taxable sales last year.
So when we look at all other,
Mhm.
right, what's getting dumped into that mining activity?
Yep.
And then also severance taxes,
Yes.
which are, I had to learn, are two different things. Severance is like pulling ore out of the ground.
Yep.
Mining is just kind of all other mining activity. And so you can really see that in Greenlee here. Their single industry, 52% is that all other category. That's kind of amazing.
Yeah, the scale of that, even compared to their neighbor, who's also a county we think of as somewhat mine dependent, and Graham,
Yeah.
the lack of diversity there is pretty striking.
I think the other thing that can be interesting here is to look at not just the share of the tax base that comes into Greenlee, right, but kind of just the raw number. Because Greenlee County is the smallest county in the state, right? There's less than 10,000 people that live there. The industry is copper. And so if we look at not just the kind of share of that county's tax base, but the total taxable sales in this other category, the thing that boggles my mind is the smallest county in the state has the most activity in this classification compared to anybody. And there's probably some technical stuff that leads into this, right? We're just grouping all taxable activity that we can't, release together here. So in a county like Maricopa, where there's lots and lots of taxpayers, it's not as big of a deal. So less gets stuck in this category.
Yeah.
But the fact that Greenlee County has the most taxable sales, period, not share of taxable sales, just the most taxable sales is kind of mind-boggling. Almost $300 million in activity.
Yeah, it's not that that's not performing, obviously. It's just that for that to make up for every other revenue category is asking a lot.
It is,
Yeah.
right? And something that's so commodity dependent, right? It doesn't follow the trends of the economic cycle, at
Mhm.
least not in the way we would traditionally think about it. Because from that chart that we saw before, most other counties are reliant on just like you and me going to the store and buying
Mhm.
stuff, that retail activity.
Mm-hmm.
It's really different when your entire tax base is based on the price of copper, basically. So the other thing I wanted to kind of look at here was that point that you made, Brandon, right? Like, is this performing? Is this classification performing? And we can see kind of the annual change in it here at a glance. And so from 24 to 25, Greenlee did see an increase in this classification. But like you said, for it to make up for all other classes is kind of a big ask. And so we can look at this over a longer period of time. And I think it's interesting. So this is automatically kind of going to show us just the all other classification. And I'm just going to show Greenlee County because you can see in this more time series annual change chart that the volatility that this county experiences is kind of unlike any other county has to deal with because of this dependence on a single industry.
Yeah, I was going to say, if the mine's doing really well or if copper prices are up, you can see that trend in the data. But if they're not buying as many things, if the mine isn't buying stuff, you see that kind of stark drop there.
And it's like a totally different planning perspective that county has to have, right?
Mm-hmm.
Where another county is able to somewhat reliably say, all right, our property taxes are going to come in at this much 2 times a year, and our sales taxes are going to come in, in roughly equal amounts each month. Greenlee has to have way more of a cushion to be able to say this totally unpredictable commodity that we have no control over is increasing or decreasing. And so if it's decreasing, we've got to have the capacity to still deliver services, because it's not like the service demand goes away.
Yeah, when you do future planning, you're usually talking about the difference between best case and worst case scenarios,
Yes.
single digits. I mean, the swings here are much more dramatic than that.
Yeah, and again, kind of like that VLT example from before, if it was a small part of their tax base, right, there's some volatility in this other category for other counties, but it's like 5% of their tax base. So it doesn't really matter that it's super volatile.
Mm-hmm.
When it's 52% of your tax base, it's kind of a big deal.
Yeah, it's really hard to manage.
The thing I don't know, though, Zoe, and you track this a lot more closely when you're looking at the revenue dashboard on a monthly basis, is kind of if this relatively weak performance in TPT has been sustained into the current fiscal year, right? Because we're 3/4 of the way through fiscal 26.
Yeah, just about. And so what Vanessa's referencing are our revenue dashboards, which kind of show you real time in the current fiscal year how major county revenues have been performing. And so if you pull up the revenue dashboard, you can actually see that this trend of slower growth in TPT, that's really been consistent throughout fiscal 26. So both the state and the counties have actually been growing, kind of in the low single digits in terms of shared TPT growth.
It's only 4% for all of the distribution to all 15 counties.
Yeah, which has been pretty stark compared to the last couple of years where we saw kind of a big boom during COVID, a lot of spending activity.
I don't know, though, right, with Greenlee being so different, if that narrative is any different. So I'm just going to filter this for only Greenlee County so we can see kind of what's happening fiscal year to date in 2026 in Greenlee specifically. And these charts look kind of wild.
Yeah, wow. You're seeing 6.5% growth in their local excise tax and 22% growth in shared TPT revenues.
Yeah, so even though these bars basically show that flat growth we saw through fiscal 2025 in TPT, the county's seen a much different performance than what the rest of the states see. And
Well,
yes,
we know that the price of copper has increased, kind of sadly, because people tried to steal our copper pipe. And the TPT data shows that.
and the TPT data shows that. But yeah, it's just kind of mind-boggling how this is happening.
The visualization works really well here. Going back to the all county view, the point of this and the coloring of this was to allow you to sort of see previous fiscal years and then moving toward current fiscal years sort of stack.
Yeah.
And so without thinking about it too hard, you can just see that even though you're talking about slower growth, you have growth year over year, right? When you switch to Greenlee, some of the colors are upside down, right? The white isn't necessarily at the bottom anymore with the darker colors in recent years at the top.
Yeah, it's a volatile cycle. It's not necessarily like a sustained trend.
Right. So even some of the current growth that you're talking about is much more recent. You can see a lot of change and even some decreases going on in previous fiscal years.
Yeah, the other thing that might be interesting to do here is just go back to see in the pandemic kind of what these lines looked like, because all these are really just stacking on top of each other, right, from fiscal 2023 forward. But if we pull it back and go kind of pre-pandemic 2019, we can see on this bottom chart here that there was just a huge spike during COVID,
Yeah,
which
wow.
also makes sense. I think there was also a big copper spike during COVID, right? Because everybody was buying computer chips. And what are computer chips largely built on? Copper. And you can kind of see how that boom and bust cycle impacts this county in particular. No other county's chart looks like this, right? It's just like ever graduating bars, at least over the last couple of years.
Yeah, and if you take that spike out, it's pretty flat all the way across.
It is. And so that really points to a structural difference in Greenlee County, right? When you have your entire economy based on one of the 5 C's, you have to just plan differently. And state policy is going to impact you differently because of the unique tax base that you operate in. So every change in how we deal with the severance tax or how we deal with commercial property on the property tax side is going to impact Greenlee County way more than the state or another kind of political subdivision may feel.
And then how you plan changes, right? Like you're going to listen to sort of best practices on how much cash to have on hand, those things. But if you're more volatile, if swings are much more dramatic, if, like we talked about earlier, the difference between best and worst case scenarios in future years is bigger, then you have to adjust those best practices accordingly.
Certainly. And I think it's really easy and simplistic to say, you know, the rural experience is different than the urban experience. But when you really dig into these dashboards that we have and into the encyclopedia, you can very clearly see that the rural experience is not uniform across all of those rural counties, right? You've got Greenlee that's really single industry dependent compared to other more maybe property tax dependent counties. And so it's really interesting to sort of dig into that and see that in this data.
Yeah, so that's what we'd encourage you to do. Dig into the revenue dashboards, dig into the encyclopedia, look at what the sales tax base looks like in your community. Maybe it's more tourism-based than it is copper-based, or maybe it's really dependent on kind of the emerging high-tech sector that's happening in Maricopa County. It's all in the encyclopedia, and you can find it at countysupervisors.org/data. And we'll see you next time on Off the Charts.